So I really excited that you're here because I talk all the time on my channel about, don't wait to buy real estate. You buy real estate and wait. You can't be on defense when it comes to interest rates. You can't wait for, somebody to tell you it's a good idea. Just get into the market and just get in. So since you're one of the experts that I have on my website and that you talk about, you deal with this all the time as well, I'm sure. Let everybody hear from you, where you work, all the things, and then tell me what you can share.
I've been in the industry going on 30 years, over 30 years now. I started when I was in Idaho. I'm from a little bitty town called Kuna, Idaho. I love that little town, grew up there, graduated. I did move to Bakersfield here in 2000, 4th of July of 2000.
Oh, wow.
So I've watched Bakersfield grow, and I've watched the market go up. I've watched it come down. I've watched the interest rates go up. I've watched them come down. Everything, in my opinion, in my business and what I do, I work with more of the A paper client who has the 580 FICO score and above, and who has some money in the bank. I also have the ability to send people to do loans for people, I should say, and broker them out. And that means send them to a lender who's willing to take a little bit higher risk with somebody who's got the 580 versus the 620. With that being said, I pretty well have a niche for everybody. Your VA, your conventional, your FHA, that type of thing.
Right.
When you talk about rates, like you just said, rates, and everybody kind of cringes, and right now everybody's kind of been going, oh my God, they're 6, they're 7. Just to put it in perspective, I bought my first house. FHA had excellent credit. My interest rate was 12.5%, and that was in 1985. Now, are we going there again? No. And then, like one of my clients told me, well, okay, but the price of a house was a lot less then too. And that's true. But everything is relative to what's going on in the world, which means incomes have been going up. Prices have been going up, rates went up.
And they went down, and then they went up
come
again.
down. Do I think I'll see them at 2% again? I'm not thinking, no. I think that was an anomaly that happens like once in a lifetime type situation. Brief overview there. As far as, are you afraid to do a 6 or 7% rate? Don't be. Go in there and ask the lender who you're working with, what does it cost to buy the rate down? Can I get a lower interest rate? Explain to me, can I buy it down and what that means?
Since you brought it up, can you give us a short version of that? So I'm going to buy a house that's $500,000 and my interest rate that I've been pre-qualified for is 6.25. And you say, would you like to buy it down? Obviously, it comes to money.
Correct.
So is that something that I know I'll have a buyer that will ask me, is that something that's part of my closing costs? Where does that money come from? How do I buy a rate down? Those would probably be the first 3 questions that they would say.
Okay, so I have a client right now that one of the things I like to focus on is what payment will you be comfortable with? Because then that kind of predicates how big a house you're going to buy.
Right.
So my clients are buying a higher end home. They want still a $1,500 payment. And I'm like, okay, let's get real. That won't happen. So let's go back to what is, real and logical.
Yeah.
And so their rate was going to be 6.25 at par pricing. So no cost to the buyer, no cost to the lender, but they want a lower rate.
Okay.
So we're going to spend $4,000 and we're going to get their rate down to 5.5.
Wow. Okay. It is part of their closing costs.
Correct.
Now, if I'm a seller and a buyer says, we'd like you, Mr. Seller, to buy down our rate, that's the same thing. It just is part of the closing costs that are being offered by a seller. Yeah.
When you ask a seller to pay closing costs, reoccurring or non-reoccurring, whatever money you can get from the seller, let's say 10,000, that can be applied to anything, reoccurring or non-reoccurring.
Yeah, because you can move it into whatever bucket you need.
Correct. But you mentioned something there. You said, Mr. Seller, I want you to buy my rate down. That takes you to a different product, which is called a 2-1 buy down. You're asking the seller to pay for the cost to buy the rate down for 2 years.
Right.
They pay all of that. The buyer cannot pay that cost.
So it's only for 2 years, yeah?
Correct.
Okay. And then what happens after 2 years? They have to refi to get out of it? What happens?
The rate goes up to where it was supposed to be at the beginning.
The example you gave, 6.25. And then they said, we're going to pay the $4,000 and we're going to get it down to 5.5.
Yes.
It was, when it goes back up, it doesn't matter what the current rate is in the market at that time. It's only going to go back up to that 6.25.
Correct, because that's the qualifying rate. But I want to make something really clear. That's two products that we're talking about. My client who's buying the rate down, that's on a 30-year fixed Fannie Mae loan.
Okay.
Totally separate deal on a 2-1 buy down where you ask the seller, and there's a calculation we go through here to buy the rate down. And the seller pays that. They don't pay the rest of the closing costs.
It just gets pigeonholed into that bucket only.
Correct.
Got it. Okay. I have been seeing on the interwebs, let me share something with you because I think this is going to go to like what you and I deal with every day. Will help people understand what we're talking about.
Okay.
So let me see if I can make this bigger because I got my glasses on, Tiare, and I still need to see it. So this is from Keeping Current Matters. This is a website. Can you see that, by the way?
Yes, I can, ma'am.
Okay. So this is a website that we get a lot of our data from, and I share it really regularly on YouTube about the market.
Okay.
And so this was from, it says experts forecast a turnaround in the housing market in 2023. So they're optimistic about what's going to happen in 2023 because we're all kind of like thankful that we made it through 2022 as far as real estate goes.
Correct.
And so this guy, Christian DeRitis from Moody Analytics, says the current state of the housing market is that it is certainly in transition. Thank you, Captain Obvious. But nonetheless, that is the truth. So Susan Wachter, professor of real estate and finance, University of Pennsylvania's Wharton School, says that housing is going to ease up. I think 2023 will be a turnaround year. And then Lawrence Yoon of NAR, he always has great things to say. Mortgage rates have fallen in recent weeks, so I'm very hopeful that the worst in home sales is coming to an end. So let me stop this share and ask you, what are your thoughts on those two bits of information? Where do you fall with, it easing up and whatnot?
What I see is not so much rates falling down, but you remember how we're talking about the cost to buy a rate?
Right.
The cost to buy a rate is getting cheaper. So as an example, 2 weeks ago to get the 5.5 or 5.75 I just talked about,
right,
that cost was $8,000.
Oh boy.
Today it's $4,000. The rate itself didn't change, but the cost to get that rate did. Now, as soon as it gets to like 0, then you're going to start actually seeing the rates start coming down a little bit too. But right now they're holding pattern right in the 6s, and the 5s.
Right.
FHA is a 5.
FHA is a solid 5. Wow.
It is in your higher 5s right now.
Ooh, who wouldn't love that? FHA, because that's a lot of buyers right now.
That is a lot of buyers out there, but you're moving into the 5.875 bracket with those buyers.
FHA has a limit, and I think there's a misconception to somebody who's never bought a home before that an FHA means you don't have as much money. And I have had several buyers, they could go conventional or they could go FHA, and they looked at what the rate was to make their decision when it came time to actually decide how they were going to, roll with their loan.
Yes.
So an FHA loan means you don't put as much money down, right? So you're not in the 20-30% area that you're putting down. You're putting down a max of 3.5%, right?
Correct. Putting down a minimum of 3.5%.
Did I say a maximum? I apologize.
You can put down more, but it's a minimum of 3.5% of the purchase price.
You're right. I apologize. I misspoke.
That's
so
okay.
Yes, a minimum of 3.5%. So the limit I was talking about with an FHA loan, they have a window of price point. I think the FHA limit is what, four something.
It's 472,030.
That's a lot of house.
That's a lot of house.
That's almost a $500,000 property. Good Lord.
Okay, but now hear this.
Good Lord.
This is interesting.
Yes.
You're the borrower who's got 620, 630 credit scores, so the interest rate on a conventional loan is not going to be as appealing to you. You're going to want to go FHA probably because the interest rate will be more appealing. So go ahead and buy that $600,000 house if you've got the money to bring the loan down to the $472,030. A lot of people don't think about that. And you can put as much money down as you want.
Right.
You will always have mortgage insurance on an FHA loan, though.
The private mortgage insurance.
Correct.
That's the risk from the bank. The bank is like, that's a lot of money for us to lend you. We're going to go ahead and need you to pay us extra in case you decide to alley-oop. Am I right?
Well, it is, but the way I like to explain it is, I'm an investor and I'm giving you $472,000.
Yeah.
You, as the buyer, you look solid, but I still want you to buy me an insurance policy. That insurance policy is going to protect me in case you don't pay off the loan and you walk away.
Right.
The benefit you get is check with your CPA because you can deduct mortgage insurance on your tax return.
And the only way PMI comes off is if a refi happens or you sell.
On FHA, yes. FHA, you have to refinance out of it or sell the house. Conventional, once you've got 20% equity, you call the bank, say, Bank of America, and you say, I know I've got 20% equity. Send the appraiser out. I want that removed.
Get it off my lawn.
Yep.
I was going to share. So you're here. The company you work for is CornerStone Mortgage here in Bakersfield.
Correct.
But do they have a different name nationwide?
Sierra Pacific.
Sierra Pacific is who you are nationwide versus locally you're under the umbrella as CornerStone Mortgage.
Correct. CornerStone Mortgage is doing business as Sierra Pacific.
Got it. I think that's fantastic. So you have a lot of buyers in the market right now. And when you have somebody that is getting ready to sell and buy again, how do you handle that conversation with them about, say they were only paying, to the story you shared a minute ago, $1,200 a month. Obviously they're moving up in house. They've gone from, a 3-bedroom, 2-bath to now it's a 5-bedroom, 3-bath. Things are going to be changing and their rate is different, but they've just outgrown that 3-bedroom, 2-bath, the size of their family and their lifestyle. They just have to go. How do you have that conversation with them about the rate and the payment and how all that plays out? What's something that you share with your clients?
One of the things I share with them is that you're buying a much higher end house now. You're going from living in an igloo and now you're going to go live in a mansion. Igloo is all I could think of because I'm cold today. It's cold. It's not as cold as Texas though. Or Wyoming. A friend is going to Wyoming. My son lives in Maine and a little town in Maine is 58 below today. So we're not that cold, but I just get chilly. Anyway, so I tell somebody you went from a much smaller home into a much bigger home.
Right.
And owning a much bigger home, one of the perks is you have a bigger payment. It's like buying a VW car versus a Mercedes. If you're willing to drive the Mercedes, you're willing to have $1,000 a month payment.
Well said.
Versus having a VW, which was a $300 payment.
Right.
The VW is what you have when you're a teenager and you're figuring it out and getting your feet in the water.
Sure.
The Mercedes and the mansion is what you have when you're now flat out. Congratulations, you are an adult. You're making a living. You're providing for your wife. You're providing for those 3 kids. And those 3 kids are dying for that swimming pool in the back. That's just how I explain it. And then there is always okay, this is the payment. If you're not comfortable with it, we'll look at how we can adjust it to make it work. Now we're comfortable with the payment, but it's still not that $1,200 payment.
Right.
Down the road, you can refinance and amortize it back out again over 30 years and get that payment to go down. But what you are doing when you do that is you're extending the term of your loan. So that's where you have to sit there and ask yourself, what do I want to do?
I mean, I think it's reasonable. And I think that's a big question. So back to, I'm going to share my screen again to another document that I got from Keeping Her It Matters. The document says why it makes sense to move before spring. And it was saying, expect sales to pick up since mortgage rates have markedly declined after going so high last year. Sellers are giving, this is a nationwide bit of information, but it says sellers gave concessions to buyers at 41.9% of all home sales in the fourth quarter of last year with a conversation like what we were just having about, the buyer that, is like, I'm going a VW to a Mercedes. They also need to be prepared that they could still get some help from their seller, whoever they're going to buy that house from. They could still get help, and they might have to give help.
Correct. I was going to say that.
So they might have to get that on both sides, but they're still able to move up. They still can make it work. So you can still negotiate, or not negotiate, but like maneuver their loan amount and the money that they're putting down and what they're getting from their sale, and still reduce their rate potentially, and they can get help from the seller. All of that can still happen. Okay.
All of that plays into it.
Yeah.
And even where they get their homeowners insurance from, I always recommend everybody shop around. Look at who does your car insurance, because when they bundle, the car is then cheaper.
Right.
But definitely shop around, because some policies I've seen are like an exorbitant monthly premium. And then I'm like, guys, that just upped your payment this much more. We need to find something that is more in line. So those are all those things we do to guide. We want to guide our borrower, just like when you take them out and you're showing them houses, and they want that mansion, but I've already told you they can't quite afford the mansion on the hill. They can afford the little cheaper, a little bit less.
At the bottom of the hill.
Correct. And it's still a very nice house. There's nothing wrong with it.
Right.
How do you get them steered in that direction?
That's it. Exactly. We talk about the benefits of not having the big one, not paying for the big one. You'll get to the big one after this one, but let the big one be the one that you learn from. Bigger house means bigger cost, bigger everything.
And that's a good point right there. That's a great point, because in Idaho, when I bought a house and it was in a special little subdivision and a higher end home, holy cow, I was too young. I did not understand all the maintenance upkeep that went with that. Nobody made me aware of that, and I was like, whoa.
Yeah.
So those things play into it.
What other advice would you give to somebody versus the market right now, that we're hearing so much drama going on right now about all the things? The bottom's going to fall out. No, it's not. Yes, it is. What would you say is a good way, like, we're talking fact versus fiction? Obviously, that's fiction. What would you say is fact? What advice would you give to somebody that's watching this right now?
Number one, we're not going to go through 2008 again. 2007 and 8 and all that. We're not going to do that.
Say it louder for the people in the back.
We're not doing that. The reason we're not doing that is because there are no 80-20 loans out there. That is what caused the problem, was all the 80-20s. The other issue that caused the problem, and I remember it so clearly, when people were going, I put in 4 offers and I keep getting turned down, so by gosh, I'm going to put in an extra 50 grand to make sure my offer gets accepted. When you bid that much over the purchase price, or the appraised value, it's the appraised value. When you're bidding that much higher and bringing that cash to the table, you're already upside down. Right. And you will stay upside down for a period of years, depending on what the market does. So when people say prices are coming down right now, I don't like to say prices are falling. I like to say, no, they are stabilizing. Yeah, and the reason I say stabilizing is because we went through a period of real low rates where everybody was wanting $600,000 for a house that was only valued at $500,000. So that house didn't sell. So now it's getting put on the market at a reduced price. Everybody thinks the price is dropping. No, it's not dropping. The value's still $500,000.
Right.
What's happening is the seller can't get that extra 100 grand they were shooting for. So we're stabilizing.
Yeah.
And we're going into fixed rate loans. We're going into qualified loans. So I don't see us going through a big recession or a big market drop or anything like that. I don't.
Sometimes I think people just want so badly, even though, the government's printing money, like it's going out of style, it looks from the outside, it really looks like, the powers that be are doing everything they can to try to crash the market with the way they're playing games. I really think that you just have to like tune out all of that and be like, what do I want for my family?
That's the best way of saying it right there. You know, you've got a decent job. You've got a job that is stable, you know, and when I say stable, what I'm saying is you've been in that job, you know, a good 6, 7, 10 years.
Right.
People used to stay in jobs 20 years.
Right.
You don't see that very much anymore.
Right.
Because people move around trying to improve themselves, and I get it.
Yeah.
But if you've got a decent income, a stable job, then you need to be taking care of you and your family and work with what you've got out there. Don't sit there and go, I'm going to keep renting and paying John's house payment for another 5 years till everything settles down.
Yeah.
Because in 5 years, I'm pretty sure there's going to be something else going on that's going to have everybody in a tailspin.
And that's one of the things that I constantly am advocating for with my clients is like, when you tune out all the noise, it puts you in a position of offense. When you listen and you ride this roller coaster of, is it high? Is it low? Can we afford it?
Right.
Then you are in a position of defense. And staying on offense is a winning proposition 99% of the time.
Correct.
And I am just, to your point about, you know, paying somebody else's mortgage, being a renter, it's like that's not a long-term plan.
No.
Like, it's a buoy to get you to your first house. You divorced and you got to rent for a little bit until you can figure out what you're doing, where you're going, what's happening with the kids, how much room do I actually need now that it's just me, or, you know, whatever, you're new to town, whatever your scenario is. Renting is the in-between.
Correct.
It's not the forever plan.
It's kind of a little stepping stone to buy the first house.
Yeah.
It is then the stepping stone to the next house.
Right.
And if you're somebody who looks at and thinks about your financial wealth, and a lot of people don't, I mean, it's amazing to me who, when you ask people about their financial wealth, and they're like, huh?
Yeah.
You know, your financial portfolio.
Right.
The biggest piece of it, and the biggest piece that starts it, is real estate, and it's your home. Because you can take that real estate and refinance it, cash out of it, and make that house work for you to accomplish buying a rental that somebody else now pays for you while they use it as a stepping stone.
Right.
Does that make sense?
100%.
And then I want to go back to one question you asked about FHA.
Okay.
FHA is not first-time home buyer. It's geared toward first-time home buyers who have lower credit scores, not enough money, etc. But I have a lot of people who go into a conventional loan, but then they found, oh no, there's a house I really want, and they do it FHA because this one's conventional over here, and they can put less money down, but they still have great scores and all the rest.
Right.
The only caveat to an FHA loan is you cannot have two FHA loans in the same like town, so to speak. So if you have an FHA loan here in Bakersfield and now I move to Texas, I can get another FHA loan there and rent this one out. But there is a mileage parameter. I believe it's 50 miles or 80 miles.
Oh, so you can't have two. So you can't have an FHA loan on your rental in Bakersfield and on your primary mortgage in Bakersfield.
Correct.
You have to have one or the other.
One or the other. Yes, ma'am.
Or if I'm going to get an FHA loan and I already have one here on my property here in Bakersfield, but I want to buy in another state, I can do it in the other state.
Correct.
Okay. That makes sense.
The only way you can have two FHA loans here in Bakersfield is if you've already got two kids and you think you're having your final third child, but you actually had triplets instead.
What?
So you totally outgrew the house.
Oh.
If you can flat out prove something like that happened, or God forbid, your sister passed away and she had 4 kids. Now you're in charge of those 4 kids plus your 2, and you've only got a 3-bedroom house. You've got 6 kids. Right. A circumstance occurred that made you outgrow this house. Then you could do another FHA loan.
Those are rare occasions, though. Like, that's not every day.
That's not an everyday thing. That's why they're considered a extenuating circumstance.
Yeah.
And they're pretty strict on them.
I'm like following your story. I'm like, what? We're having a 3rd kid and then it turns into a 6th and a 5th and a what?
Yeah. A little long on the story. Sorry.
I am so grateful that you took the time out of your very busy schedule to come and help my channel get a little bit smarter.
Anytime.
I'm so grateful that your information is on my website, mybakersfieldrealtor.com, so they can reach out to you and be like, tell me about that. I've got triplets on the way. No, I'm only kidding. So before we wrap up today, tell everybody where they can reach you.
Everybody, please give it a call. Well, yeah, everybody, because obviously I like to talk. If I can help you with any of your lending needs, please call me at 661-246-6565.
Love it.
And I'm here at CornerStone, and we're located on the corner of 4560 California Avenue. We're in here behind Dignity Health, and we're on the 3rd floor.
Thank you so much, Tiare.
Thank you.
I appreciate you coming on. Have a good afternoon.
Honey. Take care.